Hey, good morning. And I've got to tell you, right before I got on that bike, I read an article, right? And it gave me just an amazing statistic. One that, I almost didn't believe, but then you have to believe it. And that is that 66% of small business owners won't apply for a bank loan because they don't think they'll be approved, right? That seems like a ridiculous amount of people just won't do it just because they don't know or they think they're going to be approved or not approved. And believe it or not, it's well founded, right? When you really look into it, 47% of those that did apply were rejected. So in most cases, I'm telling you, it's just because they weren't prepared. And that's where education about the process comes in, right? And here's what bankers look at, right? I'm going to break it down for you just a little bit in a short segment. And it's called the 5 C's of credit. And it's character, capacity, conditions, capital, and collateral. Now, let me tell you just a little bit about what those are, right? So let's start with character, right? So character is going to be used to measure how trustworthy and reliable you're going to be as a borrower. They're going to look at things like your credit score, your credit history, bankruptcies, foreclosures, how you handle your debt obligations, those type of things, right? So that's character. Then in capacity, it considers the level of cash flow that you have, and it measures your ability to repay your debt. And they're looking to see if you have enough cash to pay it back, right? If they're going to borrow from them. So let's look at the capital, right? So you've got the two. They're going to look at the level of debt you currently have, and they're going to measure it as what they call leverage. How much cash versus how much debt you're going to have. And the lower your leverage, the lower that debt to equity ratio is, it's a better thing, right? So you want that debt to equity ratio, if you're looking at that, to be at 2.5 or less. See, there's kind of an answer to a banking test right there. The last one's conditions. I'm sorry, not the last one. Next to the last one, I think. Conditions. Yep, next to the last one's. And that's, they're going to understand the current market that you look in. That, believe it or not, that impacts it. If you're in a dying market or a business that operates in a poor environment, they realize that your money's probably going to be not used well. And if it is, they're going to see how you intend to use the money. They're going to ask you how you use it. They're going to look at your interest rate and the size of the loan that you want. And all of those things impact how the conditions around you can impact how that you use the money. So they're going to look at all that. And then we have collateral. Right? Collateral is the business or the personal assets that you can pledge to the loan, right? And sometimes they have unsecured loans, but other times they're going to be looking for at least two different ways. Do you have the cash in the business? Is there an asset that they can grab a hold of? Those type of things. So those are the 5 C's of credit. Two key numbers to watch. One is that debt to equity. If you're looking for a bank loan, you want that to be at a 2.5 or less. And basically what that's saying, for every dollar you put into the company, you're going to let the bank put in $2.50. The other one they look at, of course, is your debt service coverage ratio. That's, how much cash do you have to pay for every dollar of debt. And you want that to be a 1.25 or higher, And the third one I'll throw out for you is the current ratio. And the current ratio is about your current assets, divided by your current liabilities. How much money do you have to pay for your current stuff you had to pay for this year. And you want that to be a 2 or higher in general, right? Your industry may be a little bit different, but 2 or higher. So, hey, a lot of time to think when you're sitting on that bike right there. So a lot of time to think. There it is. But there's a little bit of knowledge dropped on you. So successful business owners, SBOs, they're going to understand, how to be prepared to go work with a banker. And best wishes for success today. Go get them.